The S&P's off by 31 points right now. The NASDAQ 100 off by 161. We got a little bit of selling. We got Tesla in the red today. And right now we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at the bottom of the hour, folks. Always check it out. And you can reach Tim at his website, which is ord-oracle, ord-oracle.com, ord-oracle.com. Tim Ord, good afternoon.
Yeah, good afternoon. Kind of a dull market we got here.
You know what's not dull, Tim? Elon Musk and Donald Trump going at it on Twitter. No, I had to. I'm sorry, but they're having quite a day. I can't. It's too amusing for.
Yeah, it is amusing.
Hey, listen, man. You got to have some laughs. I was saying, you got the richest man in the world, the most powerful man in the world, and they're like battling it out on Twitter. Why not? But let's talk some indices, man. I got your charts up here, Tim, and let's start it off with the SPY if we can. Go for it, man.
All right. Anyhow, I listed in blue here, blue squares, the ticks and trend closes that are relevant over the last, actually since about early April. And we kind of have a few of them here. We had one back on May 5th, I think it was May 15th. Got another one a couple of days ago last week. And we're getting another one today, or actually got one yesterday, 1.3, but only had 17 downtick readings. And I thought the market rally up to 610. And I'm kind of watching here. We're off 50 or 0.5% on the S&Ps. I don't have my Thinkorswim program up right now because I'm using this computer for this program. But it's kind of a wishy-washy here. I'm in the market pretty close to where we are right now, just a smidge lower. And I'm thinking about selling this position. I thought we might get to 610 on the SPY. And the way the volume's kind of coming into today on a little bit to the downside, it's not ideal. If you notice, can't see it, but yesterday's volume was about 10% lighter than the day before. And so that it's not a lot of energy to the upside. So it's not really a bearish move here, but it's not really bullish either. Let's look at the weekly charts on the next chart. So anyhow, the weeklies roll the dailies, and the last high came on 2 weeks ago, which is that red line here. And that came in, I think, 370 million shares. That's on a weekly time frame, so that'd be on tomorrow's closed volume. And we're not going to come in this week on 370 million shares. I don't know what we're going to be, probably less than 300 or thereabouts. And so we're testing a weekly high against the previous high. It's going to be at a lighter volume, and right now we're pretty much at that previous high. So on a weekly time frame, we may find resistance right here. But you got to wait until tomorrow's close. For some reason, volume jumps up tomorrow. Then that would negate that idea. But we're still in consolidation. It could be just a little lower left or right shoulder. I think this whole pattern, here's the head, which is basically the April low. The left shoulder is from December to, February. I think the right shoulder's starting right now. There's real good support at around 370 area, which is basically jumping above these highs. So we may go down here, then may back up and build the right shoulder. But probably over the next 2 months, it's probably the market's not going to go anywhere. The reason why I'm saying the next 2 months is this is the monthly chart on the SPY. The right shoulder started in December and went into the head, which is April. I just took a cycle of indicator, and so that means basically August is where the next rally should go, as head and shoulders pattern are symmetric. It's the left shoulder around 3 months, the right shoulder approximately be around 3 months. So they always look symmetrical. So what we're entering into is the market, they call it December doldrums. And it's starting to look like that. So I thought we'd get a 610 target. I'm not sure we're going to make it here. If we get panics on the ticks and trend tonight, which we may get it, I'll wait till tomorrow and see what to do. If we don't get it tonight, I'll probably bail on that position I got long, which is just going to be a minor gain, but it's not a market. I don't. At least it's not set up at this time to really short. The reason why, because the VIX is darn low, and around 17 and below is usually not a really worrisome sign. So even though we're kind of making higher highs, the VIX is still making lower lows. In general, that's bullish. It's just kind of a market you do really want to trade hard either way. But I do think a hard trade's going to come up, but it's not going to come up until probably that August time frame, where the market may wander around in this vicinity right now between 570 to 610 and not really go anywhere. Then August, you get some sort of a climatic low, probably not too far from 570, and climatic is good. Climatic is, panic. And so we'll probably have some sort of panic ring in August, and that'll start the next rally up to 740. And that's the one to catch. Between now and then, I don't see anything really dramatic here. It's just kind of a garbage market. So, but it's always quiet before the storm. But this quietness, I think, may last until August. So it's not really a big bear here. But go ahead. I'm sorry.
No, it's great, and I love, it's pretty cool that you come on. You're on every Tuesday, every Thursday, 3:30. Okay, we talked to Tim, and it was just great that we had some real action right as you were coming on. Especially, S&P has probably dropped 40 points, Tim, in like the 10 minutes that you were just getting ready to come on the show. And when you're watching, you talked about the volume, of course, but for those traders out there, and I love just the way you went through, just kind of your own mentality of we're watching it today. So is that something when you're making that and you're watching? And I love how you go shorter. You go the daily, the weekly, the monthly, and you started off with the daily. So for a day like today, are you watching that and you're literally just saying, and I know that it's not this simple, but, this is a volume bar that is not indicative of strength, and the way the volume's coming into the downside, that might change it? Or how I was wondering how, because I think so many of us, right, you watch a day like today, boom, the market's trading down, and we see the bounces though, and I just, how do you look at that? Because I think that was so cool when you started with that.
Well, actually, I got back here, the dailies here. I kind of watch as the volume pushes up. Like, I don't know, you start on this day right here. If you take that down, that volume day was about, I don't know what it was. But anyhow, as the market pushes up, the volume should be equal. Right. Yesterday's volume or higher. Yeah. It turns out to be 10% less, which it was yesterday. That was kind of a bearish sign that we're going to maybe start a consolidation.
That gets your spikes up. Perfect.
Yeah. So, but we hit another new high today in higher volume. If we're going to end up today, I would stay on that position long.
We got to take a break. Folks, we're going to come back, finish this. We're going to talk gold as well. Stay tuned. Welcome back, folks. S&P's down by 22. NASDAQ 100 down by 135. Market clawing back some of those losses, though. Getting a little bit of a bounce. We're a solid 30 points off the lows. We're talking to our man, Tim Ord. Remember, folks, you can reach Tim at his website, ord-oracle.com. And, Tim, let's talk a little bit of gold if we can.
All right. This chart is the bottom window's GDX to ELD ratio with a Bollinger Band on it. Next window higher is a GDX advanced decline with a Bollinger Band on it. And next window higher is a GDX up-down volume with Bollinger Band. The top window is GDX. And what I did when three of the four indicators close above the upper Bollinger Band, which all four of them had done it over the last couple of days. We're actually still above the upper Bollinger Band. Normally you get consolidations, and all those blue dotted lines are times when that condition was present. So we're up against a resistance area. This is one indicator I use. Usually I like to have two different types of indicators to really help increase the odds of the signal, but it's not the time to chase the gold stocks right now. And we'll go to chart number, whatever this number is, but this is a weekly chart of GDX, and the weeklies rule the dailies. I do volume studies on the weekly just as well. If you notice right here, back in mid-April, we had 154 million shares traded that update. Now this is a weekly chart, so this volume won't be updated until tomorrow's close. But if you do the averages, we're not going to reach, I think, 154 million shares was traded on the mid-April week high, which is over a month ago, mid-April high. We're not going to reach that right now. When I did this chart with a day and a half to go, because I did this about midday, we're about 101 million shares. So we're about give or take 50 million shares short. And so that averages out about 30 million shares a day to get to 150. So we're not going to reach that, most likely. Sure. So we're testing a previous high of mid-April on lighter volume on a weekly chart. So normally you need a sign of strength through a previous high. A sign of strength is at least equal volume to the previous high. If it's 10% or less, which this one probably will, it's going to be resistance. And that implies you can't get through that high and reverse and try to take out the previous low. Well, the previous low in this case right now is around 46, give or take. Okay. I think we're doing something a little bit deeper than that. But anyhow, we don't have the energy to push through the previous high of mid-April. So I think because of this chart and the previous chart, we're running into resistance. We're going to have some sort of a pullback. And pullbacks are good. We had a decent run, from January. We kind of ran up at the April. I think April is where the consolidation started. Even though there's a lot of gold stocks doing really well, they're probably going to take a breather here. And at least 48, I actually think we're going to get down to 39, thereabouts, because I think this whole thing is 3 drives to the top pattern. But even to go one step further, this is a monthly chart. So we got the daily charts showing there the market's extended. We got the weekly charts testing a previous high at a lighter volume, most likely, unless for some reason you get super high volume tomorrow, which undoubtedly we won't. But if you even look at the monthly charts here, this is GDX with the Bollinger Band on it on the monthly time frame, and we're probably making a double high on the monthlies too. We're not, the month ends, that's a long ways away. That's 3.5 weeks away, but we're up against the previous high. And on the weekly time frames, we're going to show a bearish divergence in volume. And if you notice, if you get 80% above the upper Bollinger Band, like these cases back here, normally you're due for consolidation. In other words, the market's stretched too far too fast. And if you notice this, if you can kind of see it there, where we are right now in this, we're about 100% above the upper Bollinger Band. Okay. So the open and close right now is 100% above. And that's really rare to get that 100% above the upper Bollinger Band on a monthly time frame. So This is a monthly, not a weekly. So it's pretty rare to do that. And if you notice also, those previous highs, when you get above the monthly mid-Bollinger Band, it's kind of hard to see, I know on TV there, but all of those were double tops. This one back in 2016 was a double top. 2019 was double top. 2020 was a double top. Chances are this one here is going to be a double top too. So I'm looking for a pullback. I still think 3 drives of top patterns forming. Big support at around 40. You rally through 40, probably going to come back to it, then rally back up. But if you also notice the monthly RSI is way in the heck up there. Here's a 70 that correspond to a Bollinger Band, 80% above the outer Bollinger Band. Here's another time he got up to 70 on the RSI. We're 73 right now, almost 74. So this is on a monthly time frame, not a daily or a weekly. It's a monthly. Yeah. So the monthlies rule the day, or the weeklies rule the daily. So I'm not a big bear. I'm just saying it's probably we're into the summer time frames, which a lot of times summer doldrums. I've raised a little bit of cash on the gold issues, took some profits where some of these stocks went above the monthly Bollinger Band, and so I didn't step out 100%. But, some of those stocks I stepped out 50 to 80%, always kept my foot in it. But I think if we do get back to 40, I think 39, I have a bunch of different indicators that measure sentiment on gold also. I think sentiment will be high, but I'm actually getting quite a few emails right now asking what's gold stocks to buy. And I think that some of the lower tiers will do it, but usually when I start getting emails and calls, that's another sign that over the years has told me that, if everybody's really perking up to buy gold stocks, probably not the time. But when you get back down to 30 or back down to around 40, nobody will be calling me to buy gold stocks because if they did get long here in this vicinity, chances are they could possibly get beat up a little bit. But
I
nothing
remember
significant.
those days well. You, my dad, and my dad, he wouldn't want any calls, Tim, right? When gold was rocking, because you get all those calls, and it's like, we're getting all the calls. That's it. We're at the top, and we're generalizing, folks. But that is a real deal. And, I appreciate the way you break it down, Tim, the daily, the weekly, the monthly. You go over your ratios and just the charts. And, just from I'm in a similar ballpark, man. And the move that we've had, I was just jumping around last night on some of these equities. You got an equity like wheat and precious metal, and no matter where you jump, you could do it, man. Harmony, all of these equities. Wheat and precious metal right now is a $41.5 billion company. And 2 or 3 years ago, you were like a $15 billion company. It's like, my goodness, and it goes, that's just there. So that's $25 billion in market cap, maybe a little digestion might be in order. Yeah. Tim, thank you so much for the time. Folks, check it out, ord-oracle.com. And don't forget, Tim's got a couple outstanding webinars under the services tab at TFNN. The secret science of market tops, how to identify those market tops, and the 6 secret ratios. Every trader should know both of those. $149 run on the services tab. Tim, thank you so much, man. Have a great week, great weekend. We look forward to talking to you next week.
All right. See you then. Thanks a lot.
Thank you.